Now, I want to introduce this properly. We put up in the business continuity plan what I called a really quick cash flow. And it was quick. It was designed to, the client calls you up and you really quickly need to put something together to get a really quick cash flow forecast. But we're now in a situation where we're having fundamental changes to business models, where businesses are really thinking about staged scenario wind downs in their business, or if they're changing their businesses, and we've heard from both Jacob and Mark, some really cool things that businesses are doing to change what they're doing in their services. We need to be able to quickly cash flow model that, because one, the banks, it's critical for the banks, Tim. Like you had that conversation this morning, they have to have it. If that's the scenario you find yourself in with your client, and if you want to look at something a bit more advanced and you've always wanted to deep dive into some of the cool stuff of Excel, this model's for you for free. Now, Lance, you and I have been working together for a long time. If I came to you off the street, how much would this cost?
Yeah, David, something like this would be around $30,000. I mean, it's, I've customized it. We're going to offer not only the model for free, but free feedback if anyone wants some enhancements or, not customization for their client need, but so for instance, income tax, we need to put in, this has been done very quickly. The government stimulus, as it's literally the New South Wales stimulus was on Friday, has already been put into the model. So yeah, all of that, 30K.
Let's get into the model. Let's show it off. I hope everyone's excited, because this is Excel on steroids. This is the best of what Excel can be. And Lance, I really want to start off with just very quickly, so the key purpose of this is, good, Jenny, you're excited. Good. There's some key things that I want to share, some key ideas. Usually when we pick up Excel, we just start modeling, we start using a thing and we use tabs. Lance, your models have a table of contents.
Correct. So it's important, if you think about a website, right? When you navigate a website, everyone navigates websites through really a hyperlink. So we want to make it really easy for our clients, which include accountants. We support a couple of accounting firms in leveraging this. We build the model, but then we pass it over to them. So having a table of contents means that everything is visible. The outputs, the assumptions, the detailed outputs, and some data and dashboards and appendices, including some error checks. So people know exactly where to go rather than having to navigate all the tabs at the bottom, which is how everyone struggles. And if you wanted to jump between one spot and another, it's 2 clicks away. So that's the first thing, is the structure of the model is important.
Now, this is really focused on scenario planning. So Lance is going to do a quick video that's going to help you guys. It's going to be in the BCP of how to use this, a little bit of an instruction manual. It's really easy. You can copy and paste a balance sheet and a P&L out of Xero, dump it into, or any accounting system, dump it into this, and it'll give you a base scenario. Lance, let's show off the fancy scenario manager.
Okay, so David, just quickly on the first point, where would you put the data? This has been tailored a bit more for Xero. I think the Xero cash summary report, which you can generate off Xero. You have your balance sheet. So under the historical balance sheet and historical cash flow, you'd put the information there. You'd click on the side to have all the information, and you pop that in. We're starting the model from Jan 19, 12 months ago, because that's the sort of things we need to understand. And then you've got the cash flow as well. So you've got your cash flow summary report. The scenario manager, David, as you mentioned, is the key one. So this is where we really going to start playing with different scenarios. So at the moment, this is a pre-populated model. We're running a scenario D live, but if you want to change to scenario A, we can do that. So scenario A is, there's a 10% drop in revenue. And actually, rather than having to change this model and the logic, you can actually just change these blue cells, which are assumption cells. And that all flows through. So we've actually created quite a dynamic scenario manager for revenue and COGS. If you're a service-based business, your COGS is 0. It's not, it doesn't apply. And then the same thing with your expenses. So let's say you wanted to really make a reduction in some of these expenses, like rent, or some of these you can't reduce. We've actually created a 3-staged approach to all of these expenses. So you might cut rent initially, and then you might have to cut later again. So you have a date, and then you have a percentage, and that all flows through the model under each of the different scenarios. And you, as I said, showed above, you just change the drop down. For staff's probably one of the hardest things for people to get their heads around what impacts I'm going to have on FTE. So here we have average salary, and where we phase that. So if we want to take staff reductions, but then also FTE. So if we have a manager and we want to let go the manager 1 April, we can put that in under each of the different scenarios. So
I just want to stress how important this is. This means that as businesses and real conversations that you're having, they know that they've got a tranche of employees that might be first to, and JobKeeper payments aside, they know that operationally there's a tranche of employees that might be stood down over reduced hours. And then there might be another tranche a bit later on. This lets you create scenarios for the timing of when those things might happen. Is that right?
That's correct, David. So we have a timing of the FTE, but also timing of the salary. So there's a high, let's say we want to reduce people's salaries by 50% or 20%. We've got that as well. And then working capital. So if we want to look at working capital, I do stress this is a one-way model as opposed to a three-way, but we do have opening balance sheet and we do take into account the working capital, inventory days, debtor days. Again, if you're service-based business, probably not relevant for inventory. And creditors as well. So I think that's really important to try and understand and populate all of those. And David, I'm happy to sort of have a separate session on this so we can go a bit deeper for those that are keen. But really, once you've gone through those scenarios, you want to see the impacts of all of those. You go to the scenario dashboard, and that's really important. So you can actually start seeing, this is a stacked charts, the impacts on revenue across those 4 different scenarios, the impact on net cash flow, is critical. The government and stimulus packages, and what's happening to cash. So in all these scenarios, we're going to go into cash negative. So that's I guess on the scenarios, scenario planning. But ultimately, we're running a particular scenario here. There's a management report which we can produce, and we can actually see in this scenario where we have an alert because we've gone negative cash. We can see our revenue. We can see cash. We can also see trailing. A rolling 12 months of cash flow. We have the bank, the actual bank account, and then we can see that where that tips. So this is where it goes negative, which is why we have that alert. And then we can look at the JobKeeper and many other stimulus packages and how to change that. So the New South Wales stimulus package was announced, so that's 10 grand, and how each of these are going to have an impact. So, we can go into a bit more detail later or at a separate session.
I just want to ask quickly. So that's a great little chart that shows what cash is coming into a business based on Cash Boost, JobKeeper, state government grants. Where's the calculator that works out what that is?
Great question, David. So quickly click to the table of contents. Under the assumptions, I click to stimulus. Then I open this little drop down here, and now I can actually look at all the different stimulus calculations. If I wanted to just collapse that, so I can actually see each of these. So there's a PAYG deferral, there's a PAYG refund, which is effectively your JobKeeper. And so here you have your 50%, your 100% refund, 10% minimum in tranche 1, and 50,000. And so that's your total of 100,000 or 20,000. Calculating. Now you have the option of whether you wanted to calculate on a proxy or actual, and then the tranche 1 gets calculated and tranche 2 gets calculated based on tranche 1. So this is all being based on, we actually helped Jason Andrews do his calculator, and off the back of Jason's calculator, we built this as well. So Jason's calculator is great, and we've tested it against this to make sure that these calculations are aligned. So for JobKeeper, we have that. Sorry, that's not the JobKeeper, that's the PAYG, that's the Cash Boost. For JobKeeper, it's further down. Apprenticeships, what percentage of our salaries is applicable, limited to 21,000, and then we start the apprentice subsidy, and we've got that there. JobKeeper is, of course, as we understood, quite complex. So we've got the $1 billion, 30% or 50%. That's the size of the revenue. So that's the hurdle. How it's calculated and all the rest is an input field. People put in the prior turnover, current turnover. That drops out an amount. That's $3,000 per employee per month. And then, how many periods does it apply to? And also, when employees drop off, and sometimes they may not apply. So it may not apply to certain employees because they haven't been working for us for 12 months. We put in 50%. So it's dynamic enough to have everything. The stimulus that was announced recently across the different states, here we have New South Wales. and we've put the 10,000 in. If other states, and I think I heard on the call that Tassie has one as well, you know, you can start populating each of these and when are those payments due.
Wow.
That's amazing.
That's amazing.
Everything, Lance. That's sensational.
Lance, thank you very much. Is there anything really cool that you want to show just to finalize this before I say what we're doing next with this?
Can we see the final cash flow? Because everyone, we've got the graphs, but let's just, there's quite a few accounting nerds here in the chats. Yeah, so if you can show us.
Yeah, well, Tim, that's a great question. We've actually got two types of cash flows. One, we've got just an annual cash flow.
Of course, you've got two.
Sources and uses.
Have one, Lance.
Well, because, you know, nothing in life is simple when it comes to modeling, right? But we need to try and make it simple for people to use. So this is how would I call a static traditional cash flow, cash inflow, cash outflow movement, and there's the cash at bank. And this is on an annual basis. It's an annual cash flow. If you want the monthly cash flow, we can go down here and see that month by month. So that's, you know, pretty detailed once you've got all those calculations. But the thing I actually enjoy better is the sources and uses summary. So we can choose between any two periods in the model. So let's say we're now at Jan 20. So we want to understand what's going to happen to cash between Jan 20 and December 20. You know, that's really going to be the crunch time for a lot of these businesses, and all of that updates. So here we can see it's a 12-month period. This is the cash, that's the surplus. And so we're going to go down $5.3 million. We can see where our cash is coming in. We see where it's being applied. And then we can actually understand all of that. So once you've put all the numbers in, you then can step back from, because it can be very daunting, all the detail. You can step back and say, does that smell right? Does that look right? And I think that's the important thing, is getting comfortable with the overall picture, because you're going to have the conversation. And guys, for me, this is the key. It's the conversation that this drives. Models are not going to predict the future. They are an enabler and a tool for a conversation. And if you're going to have that conversation, have something that's robust. And look, you know, this has been done. Like I said, we're not charging for this. We're trying to help accountants see the value in modeling, help them through a difficult time. And ultimately, if there's feedback or there's things that you find, please let us know. We're actually spinning up an app as well to provide feedback. So there's a quick video, which will have this video up there as well, David. There's the current version, which will list issues tracking if there's any issues to be reported, some links to my team, and then you know, there's a chat if anyone wants. So I think, you know, if you've got any feedback, we'd love to hear from you. It hasn't been audited. Like everything, things are changing. If you find something that's missing, let us know and we'll put it in.
Now, one thing you haven't shown is the Monte Carlo's output.
Oh my God. David told me not to talk about that.
I asked Les not to talk about it, but there's still about 550 of you on. So I assume everyone's very interested in it. Lance, let's show off the Monte Carlo modeling.
Okay, so in this drop down, you have your A, B, C, D scenarios. A Monte Carlo simulation, if I just talk about it for a second. So it's a randomly generated set of assumptions between a bottom limit and an upper limit. So if you just look on the right-hand side, you can actually set your limit. So you really don't know where revenue is going to lie. It's going to go anywhere between down 80% and maybe up 10%, depending on the business. Now that's a very, very wide range. So you want to sort of make the range a bit more narrow. And really the model is going to self-calculate. What do I mean by that? Well, let's go back to, now that we've actually running the Monte Carlo live, if I go back to that dashboard, let's go to our management report. So not so much the JobKeeper, but let's look at our cash balance. And I'm pushing F9. And as I push F9, the entire thing recalculates. So what you can see is this model is recalculating live every time there's an F9 and a refresh. Now that's pretty cool, but I want to capture all of those different scenarios, and I want to run lots of them. So right now I'm just running one at a time, and there's just too much information for me to capture. So what we do is we actually put in to the scenario manager, we want to capture 500 simulations. So I'm going to click 500. I'm actually going to click this button called Simulate. And down at the bottom right, it's busy recalculating 500 times. So instead of me pushing that button and recording it, it's running that. It's going to finish. It's running using VBA. 500 simulations have been run. Okay. Now I'm going to go back to the simulation output dashboard. So now we're going to look at all those simulations. And now this is what's called a distribution curve. Very statistical across all those simulations. What's the upper quartile, the middle quartile, the average, and the median? So if we look at, what happens to net cash, that's the distribution. So we, around the 75th percentile, we're still going to be, no matter which way you cut this model, we're going to lose cash, and we're going to go net cash negative. That's what this is trying to say, is that we can run as many scenarios as we want, but if we get this right, the worst case is this is what's going to happen. So you have that full distribution curve around the impact. And I think that's the power of Monte Carlo simulation, is it speeds up those scenario analysis.
Lance, that is amazing. Look, we'll be obviously talking about getting a video of you to explain it, and we'll get you on board, in future shows, because a lot of the comments we've got that people are just so enjoying this. It's like, from an accounting point of view, as classic accountants, this is so good. Thank you for sharing.
My pleasure. Thanks, guys, and thanks for allowing me to come on and share my passion.
Love it. That's just so fantastic.
Thanks, Lance.